What stripes and bright stars through the perilous fight, and the ramparts we watched were so gallantly streamed, and the rocket's red glare, the bombs bursting in air, gave proof through the night that our flag was still there. Oh, say does that star-spangled banner yet wave o'er the land of the free and the home of the brave?
Good. Wow, excuse me. Good morning. Trying to get some stuff ready for the show this morning, and there is so much stuff going on. I am gonna just keep talking here while I get my get some notes here in front of me. There's just so much to talk to today. I thought I had this ready to go, but let me slide this over. Good morning. It is Energy Wednesday for us, of course. It's Energy Wednesday, and today there's a lot of stuff. Like, we don't even really have to focus on energy per se. We'll look at some charts and stuff on this. Again, we've been talking about this, the crude oil, the natural gas, RBOB gas. But boy, there's so much stuff went on yesterday and so much stuff today, just on the energy front on a global deal. So we're going to tear into that today, and let me get this stuff set up, and apologize for this. Okay. So tonight we also have this Technocracy Roundtable, and it's going to be on sovereign wealth funds and robotics. The robotics part, I'm not quite sure. I'm not going to probably spend much time on that. Again, this will be Patrick Wood. He's been on this technocracy front for 30 years. Courtney Turner, she was on the show multiple times. Aaron Day on the show multiple times. And I think that's it, the four of us. And, Aaron Day's background is in digital currency, privacy coins, cryptocurrency. He's been involved in that for probably 13 to 15 years, and a really good background in, commerce, e-commerce, and healthcare and food and things like that. I don't really know that part of it. I haven't talked to him that much about that, but he's just really, for the last 12 to 13 years, just been deeply entrenched in the whole crypto digital currency space. And then Courtney Turner, she's been researching a lot of this stuff that, at first it seemed a little bit, she's talking about these things like Game B and we've had her on talking about that stuff. And it was a little bit like, I don't know, this just feels a little, out there, and it doesn't really feel that applicable, but there are a lot of things that when I would have conversations with her, that would really seem like, okay, she's really aware of a lot of this stuff. And then the funny thing is I learn more and more and more about this Curtis Yarvin and, Brett Weinstein, and, you go down the list of all these people. And she's really been spot on. And Patrick Wood, if anybody knows anything about technocracy, they know the name Patrick Wood. He's legendary in that space. It's kind of his deal. He's kind of, the I guess the grandfather of the technocracy, movement, at least of the last 30 years. Right. And then I'll add the economic part of this. And so the sovereign wealth part is very fascinating to me, and we're seeing this play out right in front of us. So the timing is unbelievable. So let me go through some of the stuff that went on yesterday. And all right, let's. How am I going to do this? Let's see here. Boy, you think you're getting better at this, and then sometimes you think you're not. And then let me go to. Oh boy, I don't even have that open yet. Forget that. Okay. I can't believe this. Oh my gosh. All right. We're just going to have to roll with it this way. Okay. I'm just going to move on because I can't apologize enough. All right. So that's that, right? It'll probably be likely a 1 hour discussion with those guys, and then probably 30 minutes, maybe longer, of a Q&A. I mean, if you can, please, please share it if you find value in it. And share it if you like it. And even if you don't like it, maybe share it anyways, because I think it's such an important topic. And, okay, so let me see how we're going to get into this. If I can just switch over and let's see okay. How am I going to get to this without doing that? Oh my gosh. Okay. This might be what we have to do since I don't have this set up. We'll do that and we'll do that. Okay. All right. This should do it. I want to go through some of this stuff. I think what I'm going to do is let's blow through this. We'll come back and look at this economic data. Let me see if we can just skip through some of this. We'll come back and do that. But I want to start with a couple of these headlines. Okay. So yesterday, President Trump was at the General Assembly meeting, right? We talked about this UN General Assembly meeting. And this guy's a wrecking ball, right? He called out the global climate scam. He called out the energy debacle that Europe is in, okay, from, and I think I can throw myself down there. This will work out okay. Called out this, so Europe went down this thing, whether it was because of King Charles, whether it was because of, these globalists that are operating out of Europe predominantly, the bankers, the Bank of International Settlements out of Switzerland, the connections between Switzerland and Israel. Like, we don't know all that stuff. We can make lots of assumptions. But the point is that, Europe is in this train wreck of a mess, and in terms of energy. So, they're going to deny it, right? They all deny it. And they say, oh, President Trump's making something. But he just trashed them yesterday, right? Just a complete wrecking ball, right? And he called out how the UN really hasn't solved any wars, hasn't been involved in, under the assumption that they would actually potentially work with NATO, right, to solve problems instead of instigate issues, okay? Well, we talk about this, this sovereign debt crisis that we're in, and, the world is in, right? All this debt. And so we know that history tells us that that's going to lead to war, okay? And we really see these war drums picking up yesterday. So President Trump just thrashes him at the UN General Assembly meeting. I'm going to skip any clips on that. You'll probably see them all day if you didn't watch it yesterday. Then he goes and he meets with Zelensky, right? And then he gets, and it's a friendly thing, right? Remember the one where he's sitting in the Oval Office with Zelensky, and it's a head-to-head battle, and, Zelensky's not, they're showing no respect, and President Trump's not backing down, and the two kind of clash, right? It was, legendary type of a clash for the Oval Office. Anyway, fast forward to yesterday, right? It's pretty friendly conversation, talking about supporting Ukraine. And then here's the real kicker. President Trump's asked the question, if whatever, drones or airplanes fly into foreign Russian drones and planes fly into or over these, Poland or Estonia or, these areas that are kind of, these fringe areas, right? The gray zone. If they fly into those areas, are you okay with NATO or someone like that shooting it down? And he said, yeah, under certain situations. So what we don't know here is this him negotiating, right? Is this art of the deal where, remember, when he first came into office, or before he came into office, when he was elected, he said, even during the campaign, he said, I'll have that war with Russia shut down maybe prior to before I get in there or on day one. And so the question is, was that a setup? Did he know that it was going to be harder to settle this thing down than what it has been? Was that a setup? Because he knows how deep this thing's entrenched, right? This Ukraine thing's been built for, 15 to 20 years, right? Going back to John McCain, right? John McCain was, and Victoria Nuland and this whole cast of characters was behind setting this thing up with Ukraine. So this thing is way more deeply entrenched than the vast majority of people realize. And so does President Trump know that? And he knows that he had to set that up so that they thought it would be easy, okay, because he knew it would be difficult. And that's where he's at now. Now he's kind of flipped completely. So in the morning, he's talking about, backing, Europe, you're a bunch of goofballs, you've screwed up. You're on your own kind of a thing. And then by the time he sits down with Zelensky, he's kind of backing all of Europe, saying, yeah, we'll get behind this on this war, get behind NATO, get behind this, this aggression or, trying to stop Russia. And again, look, I personally don't think Russia's the aggressor here. I think it's Europe that's the aggressor. I don't think, and they'll say, President Trump's lately said that, the Russian economy is in terrible shape. And I don't really think that it is. I think Russia's found ways to sell their oil and make revenues, even with all these sanctions that have been put on them. So I don't really think Russia's economy is in that bad a shape now. Late 1990s, 1990s, the Russian economy was a train wreck, right? And we helped them a lot with Gorbachev and Reagan, and making sure that the system didn't blow up. Okay, so we've talked about that a little bit. But then we get into the situation with President Trump now where is he playing this thing? Is he playing all sides of it? I don't know what's going on here, to be quite honest. But what I am watching is the escalation of potential war here. And you'll see, right, as we go through this stuff, and this sovereign wealth fund stuff tonight is very timely because the U.S. is making the shift, right, from a banking. If you're going to go away from, if you're going to take out the central banks, you're probably going to take out some of the banks that support the central bank. And if you're going to do that, and you're going to do that with some form of digital currency, stable coin, whatever all this stuff is, and you're going to go direct, right, where, like Trumpette, and I'll say hello here in the morning. If Trumpette wants to transact with me, we can do that, and we don't need a bank, right? We can just, I have her, whatever, her name on her phone, and I say, Trumpette, we're going to buy or sell something, or we're going to do something, and it's a contract, right? We create so it takes all the banks out of the situation. Well, if that's going to happen, then the U.S. is moving from this situation of what we would call fiscal dominance. Okay, you may have heard that term where, again, and this kind of goes back to the end of World War II when the U.S., the Marshall Plan and everything else, the U.S. became the lenders to the rest of the world to rebuild the rest of the world after World War II. Japan. It took a little while in Japan, but anyway, Europe, right? That was right there on Johnny on the spot to lend money to rebuild Europe. And so if we're going to move this from this position of fiscal dominance, okay, into something else, what is it going to be? Well, now we see this sovereign wealth fund type, this stuff popping up. Okay, so how does this apply to what we're going to go back and look at what sovereign wealth funds are tonight. And I'm going to do a little bit of that in here just to kind of give you a little setup for it. But if we think about this from if we're going to tear down this banking system, right, and we're just going to go direct, it could be huge for people. And how do you do that without a lot of disruption? You need some sort of an interim system in place. Well, the sovereign wealth funds. And so right now, the sovereign wealth fund is being used for things like, we've seen, the U.S. make an investment in Intel, right? It got behind Intel. We've seen it, talking about making investments in, rare earth metals, different companies. I forget what the name, MP. We talked about them before. I'm drawing a blank on that. But, these different things. And then we just saw yesterday, right, this Lithium Americas. So what is lithium, right? Lithium is this, an element that can be used in batteries that really changes the characteristics of batteries. We think of old lead acid batteries, right? Where you get whatever. You plug a 9-volt in and it runs so long and you yank it out and you throw another one in. Lithium has a lot longer duration to it, and you can actually get more power out of lithium if done right. And we've talked a little bit about that, probably not enough. But the point is this Lithium Americas. Yesterday, President Trump said, or today, I think it was, last night late or something. Again, just unbelievable, this guy. But the point is, we're going to make an investment, potentially another 10% investment in Lithium Americas. Okay, LAC is the ticker symbol if you want to take a look at it. So I'm sure it's going to spike off this, the stock's going to spike off of this. And it's going to go in the sovereign wealth fund. Okay, so now we start putting all these things in the sovereign, or, essentially it falls, I don't know if it's officially in the tank of a sovereign wealth fund, but it's essentially acting as a sovereign wealth fund. And we become more of a state player, right? The government is taking active roles in companies that it needs. And so the excuse is, well, we need these things for security, defense, okay? What just ramped up yesterday, right? When President Trump said, yeah, it's okay if you shoot, Russian aircraft down. They're putting down a major red line here, okay? And we know we have sanctions in place, right? And President Trump has said, sanctions are expensive to put on, right? What we really need to do more than anything is probably just enforce the sanctions that we already have in place, okay? And how can we do that? So again, we have Europe buying Russian oil. We have the U.S. buying uranium from Russia, right? We buy a fair amount of uranium from Russia. Then we want to go out and hit India for buying Russian oil or China for buying Russian oil. So this is where it gets complicated. Now you're back in the tariff space, right? Well, you're trying to use tariffs and things like that to get India to do what you want them to do. And we're finding out that India isn't, that we're exposing India. Okay, we're exposing India that they're not great actors and that they are partnering up with people that they possibly shouldn't have been partnering up with. And so this stuff is getting exposed. If you're watching closely, India's getting exposed. Turkey's getting exposed in some ways. And the goal is to expose China. Boy, that's a whole can of worms we can get into. But there's thoughts that the goal is to buy these globalists. Okay, let's just throw that camp. That way we don't get too confused, because you got the neocons, you get this group, that group, you get globalists. You got some people acting, on behalf of the U.S., not on behalf of the U.S. You get people acting on behalf of Asia, right? So let's just lump them in this big group, the globalists. The word is that they want to take things to war and move the financial capital to China. Okay, I've heard this many different places from reasonably good sources. And so, we see this whole war effort building up. And we know that China and Russia have sort of sided with each other. And people are saying China won't let Russia go down. And the whole thing's getting really, really crazy and messy. All right. And so what we want to do is try to sort this out. All right. And so the way to do that is to not be putting on a bunch of new sanctions, right? Just enforce the sanctions we have. Put down a red line, okay? Don't be flying your aircraft over these places. And who knows, maybe President Trump and President Putin had a discussion in the car, right? I think they both climbed into the beast when Putin met him in Alaska, and maybe they said, hey, look, maybe there was a deal made, that we have to hope. This is what I hope, right? If there was some sort of a deal made that said, look, we know things are going to get hostile. Things are going to escalate. We know that they're going to try to pull a false flag between Russia and Europe. It's a known thing. And, don't overreact. Let's just stay cool through this whole thing. Trust me when I negotiate this thing. That's what I have to hope is happening here. Okay. And I'm going to check in the chat here and see if anybody has any thoughts on that stuff. And then we'll pick this back up. Okay. So we got Trumpet. Good morning. Rachel Hawk, Zero Woke, Crash and Splash. Let's see, Rachel Hawk. His speech was shocking and awesome. I agree. He sure did call them out, Trumpet says. Geo Rich, good morning. But here we remain in other countries. Yep, I think I know what that means. Okay, Craig laughs. That is not good. Okay, all right, Rachel. All right. Crash and Splash, I sent javelins. All right. Crash and Splash says, Rachel Hawk, I just got an update from Wells Fargo Online. Access agreement, it's filled with questionable terms. Yeah, so, and TZ Burton, good morning. Good morning, TZ Burton. Yeah, boy, that's another can of worms you just opened up there, Rachel, with agreements, these click wrap agreements. Okay, this is that technocracy in place. They've been putting this in place for a long, long time, right? Putting in these agreements, and we don't have a choice but to just sign them. We download an app, and you either accept it or you don't get the app, You update something and you don't really get a choice. It's just here it is, And so we don't get a lot of choices. And the way to implement a technocracy is to slowly do that, where people don't, you're moving the ball slowly, where people don't recognize that the rug's been pulled out from underneath them. So yeah, I think you're right. You're spot on. And Aaron Day's done a lot of work on that. He continues to do a lot of work on it, and I'm helping him in some ways do some work on that, where, 80% of our rights have probably already been taken away from us. And so we're literally one false flag away from something like a war that then opens up the floodgates for them to say, okay, now, we're going to make this massive shift to stablecoin away from this to this, and you're going to agree to these things, right? You don't have a choice. Kind of like in COVID, they tell you, put the mask on, stand 6 feet away from each other, don't go out and drive around, don't do this, don't do that. And some people obeyed. Some people said, forget that. There were people who went walking on the beach in Florida and then they got arrested, for walking on the beach. I mean, it's complete absurdity, right? It was a complete control move, And so that's the same kind of thing. We're one false flag away from them taking that 80% of these terms and click wrap agreements that they put in place. So we're right on the edge of this technocracy thing. And we don't know. We've been trying to call out who's involved in this, right? And who in the administration is involved in this, right? This technocracy movement. I mean, Howard Lutnick does not look good in a lot of ways, right? We're going to talk about that today with Tether, his connections to Tether. And then we see, what's his name? Witkoff, right? He's been negotiating between Russia and Israel. Well, his son is running a crypto firm called World Liberty, I think it is. And then guess who else is heavy investors in that? Don Jr. and Eric Trump and the Trump, currency media empire. And so again, who's involved in this? We don't know, but we know that this technocracy is moving ahead. This movement is moving ahead very quickly. And that's what we want to go through today and kind of show you this stuff. But I think your point there, Rachel, it's actually right on point with what's going on with Russia, with energy, with it's all connected, right? It's really all connected, and it's really a fight for our sovereignty in a lot of ways, and fight for other countries' sovereignty. Okay, so I'm probably just going all over the place here. Let me try to pull this thing together here, and okay, so that was yesterday. The UN General Assembly, then the meeting with Zelensky, then the follow up with that. Then I saw him sitting there with Macron, although I didn't hear much of the conversation on that one, and then we talked about, enforcing these sanctions that are in place. Okay. And here's the thing that we can take away from this. All right. So since it's Energy Day, let's kind of hit this a little bit and we'll circle back through energy a couple times. So one way to lower Russian aggression is to lower the prices of oil. So again, we can hold the sanctions that are in place. We could apply new sanctions. And another weapon that we have is to lower oil prices. Okay. Or keep oil prices lower. What does that do? It puts a hurt on Russia because that's the only real place that Russia has the ability to generate revenues is, through illegal tankers and, oil tankers that are going to India for India to refine it, going to China for China to refine, raw crude oil and so forth. And then some of it slips through to Europe, right? And then Europe is actually paying Russia to fight Ukraine. And then we're funding Ukraine to fight Russia. So again, you can see how this thing is just a big money, whirlwind, right? Whirlpool of just money just flowing everywhere and influence flowing everywhere and so forth. So again, it's a lot of circular references and a lot of things going in the same direction, a lot of things going in the other direction. But here's the thing: if it's going to be very hard for oil to get above $70, right, in the near future. We see this surplus, right? We've shown that chart. I don't think I have it up anymore, but we showed this chart where in 2025 we're getting these surplus builds in crude oil, and then in 2026 it's anticipated that we're going to get surplus builds. So crude oil is probably not going to go much higher. And if it does, because of some escalation in tensions, the way that the one of the control valves that it seems like they have in place right now is President Trump can just call up the Saudis and say, hey, start putting out more oil, right? Start pumping more oil. And what will that do? It'll put more surplus, more inventory out on the market and push the price down. And I think there's an agreement, right? There could very well be a backdoor agreement with Mohammed bin Salman, President Trump. And again, back to these sovereign wealth funds, right? That basically started over there, right? We're going to get into that with the sovereign wealth funds. In 1953, Kuwait started the first sovereign wealth fund. And some people may not even know what a sovereign wealth fund is, but essentially just think of it like, I'll just hit it real quickly. So you've got this government that's making money from selling oil, all right? And they know that they go through these cycles where oil sales are really good, and then oil sales are really bad. And then they're good, then they're bad, then they're good, then they're bad. And they want to smooth that out. So when times are good, they take the revenues from the energy, let's just say crude oil, that they're selling, and then they stockpile that and they put it in a sovereign wealth fund. And then they take that money from that sovereign wealth fund and they go and they invest it around the world. And what that does, it helps them generate revenues with that money that they have, and it smooth out the tough times when the crude oil business isn't so great. Okay. And so this opens up another can of worms, forms of energy, and crude oil is going out going to the wayside, right? Kind of like whale oil did. We used whale oil to power our lamps. If crude oil is going to have the same similar kind of a thing where it's going to be phased out potentially, because maybe there is some other form of energy we're going to come up with, or it's in the works over the next couple decades or years or whatever it takes, then you can see where this is going to countries like the Middle East who are heavily reliant on these energy revenues. They need to be transitioned away from that. Okay, so there's a lot going on with the sovereign wealth fund space, but that hopefully gives you a little bit of background on sovereign wealth funds, and we'll come back to that. So President Trump may have a deal with the Saudis to say, if crude oil starts to climb up, we want to keep it down. Why do we want to keep it down? Because we don't want to fund Russia, assuming that we are really enemies with Russia. And this isn't, and Trump and Putin don't have some sort of a deal, knowing that Europe wants a war with Russia to take over Russia, right? And maybe that's what Ukraine was all about, was weakening Russia so that then Europe could come in and clean it out. Again, all theories, but somewhat founded, right? It makes some logical sense. And that's what we have to do. Sometimes we have to sort through this stuff. Okay. All right. And then, so let me, let's just go through some of these headlines, then I'll come back and do the economic data, I think. I tell you what, let's hit some charts. That's probably the best thing to do. Let's hit these crude oil and energy charts. Okay. So let's take a look at this, the crude oil. We've got, okay, this is our longer term crude oil, right? Two purple lines coming together, to form a triangle, forms the apex. It's where we have that little pink square down there. If the market can stay above or below this converging triangle at that apex, it tends to mark the trend. Okay, so let me blow this up so you make sure everyone can see it. I'm sure most people in here are well aware of what we're doing here because we've talked about this forever. But you can see this coming together. I've got it marked with all these little yellow circles converging down to that pink box. And the price has mostly stayed below there, right? We had that one spike when things heated up with Iran and, the U.S., we went in, supposedly took care of their nuclear threat. And, okay, other than that one spike, it's in that pink or that purple shaded box. Okay, you can see the one spike. Other than that, crude oil's mostly stayed contained on the downside. And that's what we're trying to make a case of. With all this tension and all these other things and potential lurking war, if there is one, can crude oil still stay down? That's the question. And that's why lithium matters, right? Because drones, right? How are these drones? Some are powered by fuel, but a lot of these things are powered with batteries. So if that's the case, then lithium becomes in high demand. Becomes in high demand for other things too, but I think mostly for the battery technology and the battery power. Okay, so that's our longer term on this. Let's take a look at this. We've got this harmonic structure, again, an old harmonic structure, but nonetheless, we have the white dashed line, the 6318 we've been talking about forever. Okay, and then we have this newer harmonic structure, although it is getting older now. This thing came in what? The end of June, so it's July, August. So we're about 2.5 months on this signal. And you can see it's wandering, and that's why I've said I think this one's polluted. Okay, I think that this thing is a lot of it came from this attack on Iran, and it brings into question because there's a lot of things in question. I could spend 2 hours on that, but the point is this: the takeaway is the 6318, the white dashed line. Okay, if the crude oil can stay down or around or below that 6318, then this concept of down to sideways crude oil seems to stay in place. Okay, we also have the pink shaded zone, right? I should probably update that just a little bit so you can see the, okay. So you can see right now we're sitting right here. Let me mark this with this yellow circle. So it's actually sitting like right at or slightly above the lower end of this energy buildup zone, right? The pink shaded zone. So again, it just keeps toying with it. We've been up in there before, back in here, we were up in there and so forth. And we tested it quite a few times here, okay, and here. So again, maybe the signal will work out and it will be great. I don't want to lean that heavily on it. If it starts to really work, then great. Okay, right now I just think we're locked up around the 6318 until something happens, right? What is that something? The Saudis start pumping more, the U.S. is pumping more, tensions ease, right, with Russia. Sometimes you got to take it to the edge before you can actually solve the problem. And maybe that's what's going on here, right? Is we're feeling this big escalation and potential World War III coming. The thing that scares me is, it's one thing to fake it but when you have this much debt that's sitting behind things, and you know that Europe is this far behind the eight ball, they almost can't get out from not going to war, right? They really want to drive this war thing because they need it, just to, so they don't get their, for lots of reasons, right? They economically to clean the slate so that the people in the government actually stay alive, because we've seen what's happened in Nepal. The people steamed the parliament, burned to the ground, and I think took care of some of the administrative people, right? So again, that's what can happen when things get out of control, and that's the verge of where Europe is. We saw these protests in France last week, I think it was, and we've seen them in the UK. So we've seen these things, we've seen these protests rising. The people are uneasy, okay? So we're on the edge, right? So again, war is kind of a release valve, because it's like, hey, we'll just take all those angry people, put them in military suits, put a metal helmet on them, and send them out, some come home, some don't, and the whole time they're cleaning the balance sheet, right? They're just wiping debts off of everything. So that, again, maybe a little bit of background on why Europe so much needs war, okay? And it's the debt. It's really the debt situation. All right, so that's the crude oil. Let's take a look at this natural gas, right? It's kind of just going along like we've thought. We've got this harmonic structure on this thing too. It responded very nicely back in here to the halfway harmonic. Again, this contract's rolled, so you can see we have these leftover circles that, nice responses up in that area. I haven't cleaned those off of there yet. But essentially the contract, we're now on the November contract in this. So we've rolled 2 or 3 times, I think, since this signal came in, but it's still responding to it. Okay. I wouldn't say great, it came down, hit that, didn't quite go all the way up to here. Okay. And you see, we did spend a little time there, and we're spending a little time there, but longer term, we're okay with this natural gas. All right. Because, as long as nothing major breaks, right, this natural gas looks good. We talked about this last Wednesday, this white dash line at this 256.6 per MMBTU. Natural gas is that bridge between, the AI data centers, right? It's gonna be needed, along with nuclear, along with coal, along with everything. If we're going to put all these data centers in and power them with energy, electricity, natural gas is going to be a big player in that until these small nuclear reactors, until other nuclear reactors get built, because big nuclear reactors can take forever, right? I mean, you're talking 10 to 15 years with regulations and construction and startup and testing and all that kind of stuff. Takes forever. So natural gas is that bridge. Okay. It's the perfect bridge. It's clean. Nobody can, throw stones at it. It's a clean energy, right? They can produce a lot of electricity. And then other nice thing about natural gas is you can turn these things on and off. So when you have high demands, it's easy to fire up natural gas. The big generation systems are like coal. Like coal, you can't, right? Once you get a coal, once you get that, once you get that burning, like it's all lined with bricks, and when you shut it down, it requires relining that whole thing with bricks. It's a shutdown of 3 months. It's a lot of effort. Natural gas is literally almost a switch on and off. You just switch it on, switch it off, right? It's really quick. Within a day or something, you can meet the demands, spiking demands for whatever reason. Okay, so again, natural gas is that bridge. It still looks good. It's kind of just trading sideways here. Nothing great. But it looks good to the upside, right? It looks like there's a floor underneath this thing. And then we've got this RBOB gas that we've been looking at. Again, this connects with the ethanol and as an energy source, right? We talked about that last week. You get this, you take the ethanol, you put in a blend, it blends in there. And what do they blend it with? They blend it with this refined product, or slightly another carbon refined product. It's called RBOB gas, and this is what they blend the ethanol with. So these two go hand in hand, right? The ethanol with the RBOB gas. And so, you can see we left this purple shade. I left this on here because we talked about that last week. This purple shaded box essentially shows the end of the Trump 1.0 administration until the beginning, till the middle of the Biden administration, right? And you can see that thing going straight up, from lows, lower lows to higher highs. And it's pretty much straight up over that 2-year window period where the inflation spiked out of control for us, right? So, and then we talk about that mid-2022 as being an important area, and this thing lines up perfectly with it, right? Middle June of 2022 is that the high yellow circle on there, right? The other end of the shaded zone. So again, this fits perfectly with what was going on in that mid-2022 that I've talked about so much, okay? So I really like bringing this into the mix, this RBOB gas. I'm glad we did that. glad we put this in the mix just from this perspective. And you can see what it's doing now is it's really squeezing tight. You can start to see a decent energy build occurring in here, the red about to go inside the white. So there's energy built up in this RBOB gas. So we've got heating, we've got natural gas has a potential for, an upside move. We have RBOB gas, corn, right? Ethanol, potential for an upside move. We have crude oil looking like it's still pretty good to the downside as long as it stays in or around the 63.18 level. And so that gives us our bias, right? Crude oil down, these others up. And that's what we've been talking about really for 3 or 4 months now, and it still seems to stay in play. I'm glad we have this RBOB in here now though. Okay. I think that's good. Let me jump over here. We'll come back in. I think this will make us functional at least anyway. So many things going on. I'm trying to get ready for the sovereign wealth thing tonight with the Technocracy panel. Okay. All right. So let's just go through some of these, then I'll come back and we'll do the economic data. Okay. So we've got this next headline. We've got Alibaba soars on AI spending. All right. Throw myself down in here. Okay. So so it's up 9% this morning. Alibaba, most of Chinese located, internet space, technology space, kind of a all around technology type of company. All right. The key is the stock is bouncing back as Alibaba boosts sentiment on AI. Again, this is all centered around the AI stuff. So the valuations on this are very high. Valuations in this whole tech space are very high. Okay. Again, it's a few stocks leading this and their valuations are way, way high. And they're being, somewhat backed up by, this constant spending on AI, and they are seeing results like in the cloud or data or, NVIDIA. It doesn't really matter right now. They're just kind of in the middle. They're just selling chips. So whether or not it works out, right, and all this AI and all these data centers end up working out and making tons and tons of money for them, right, and they, because that's clearly why they're doing this, right, is control and making money, okay? And who are they going to control and who are they going to make money? Probably us, and the system. And that's the concern. That's this technocracy. Okay. So the key is this, right? OpenAI and Oracle. Well, here's the deal, right? Valuations, not only the valuation's high, but over the next 5 years, right? I just saw this the other day when I was doing some research and I was kind of knocked me, I was sort of surprised by it. $4 trillion of AI spending globally is expected over the next 5 years. So again, it's already going and it doesn't look like they're stopping, okay? And not only that, there were CEOs, just this morning, I saw a note of it. Axios put this out, which is a garbage publication, but nonetheless, they picked up this thing about like these CEOs. One of them was of DocuSign and another one, I can't remember who it was, but they basically are going to put out an ad campaign, okay, to push governments to speed up adoption of AI from even where it's at. So we've been spending all this money, right? We just see OpenAI come in with an $850 billion expansion, right, that they planned, that they announced yesterday. And I'll get to that one in a second. But we already are moving fast. And the key is that, they're putting out an ad campaign to move even faster, right? And the CEOs are the ones pushing for this. So again, I mean, and the crazy thing is, right, for corporations to actually adopt this AI, the infrastructure has to be in place. So the question is, we don't even know if there's going to be bottlenecks in the system, right? When you start jamming this much stuff in one direction, at some point there's going to be a bottleneck. It's like on the roads. You can only push so many cars down the road. You can only push so much electricity through a wire. You can only push so much water through a pipe, at some point. And everything has its own characteristics, but it's just moving so fast, okay? And then we have Micron, okay? Again, another U.S. Micron's kind of known for, being the largest U.S. maker of memory chips, right? So they don't really fit in this AI space necessarily, but they do from a memory standpoint, okay? So Micron gave a solid forecast, again, another AI boost. They give an upbeat forecast saying that AI has boosted the demand for their storage products, and that they're saying that spending will have to go up to stay relevant in the market. So again, everyone's in this space where it's like spend, otherwise you just become nothing. We saw that with Intel, right? Intel started to fall off. Back when we were doing the show with Frankie, he said, look, it looks like Intel's dead. And I said, look, I can't disagree with that. And then we see, the Trump administration come in and get behind it with a 10% stake. And then we see them coerce, I think, NVIDIA into putting in a 5%, $5 billion, right? Another chunk of change into Intel. So then all of a sudden Intel's flying again, right? So again, if you're spending money, these companies seem to be doing well. So again, it's all about keeping up, okay? And that's what Micron's saying here, right? They expect a supply on their products to remain tight, and the demand is high. So that's a squeeze for higher prices. Demand from the data centers and AI is stretching out supply. Last year, they spent $14 billion. They expect to have to spend that again this year, too. $14 billion again. So again, spend to stay relevant. Then again, like I was saying with this OpenAI, we have, okay, so there's the Micron, gives better forecasts. Here's OpenAI. They upped things. Again, I don't know exactly what all this means, okay, when they say they're upping it $850 billion. Again, a lot of times the headline comes out, and then you got to wait for a couple of days until you really see the details. So again, it's a headline. It gets pushed on the media, and then within a week or so, you can actually sort out what it really means. Okay, and that's why sometimes we get these knee-jerk reactions in markets, right? All of a sudden, you get a headline, market spikes, and you think, oh, this thing's going higher, and then all of a sudden, it starts going lower, and you can't figure out why. Well, because the details came out, and it wasn't quite as good as what they thought, right? It was a knee-jerk reaction. So, is that what's going on here? But the key is this, that this $850 billion expansion that they have planned, okay, when you figure this out, like, again, keeping this in terms of energy, since today's Energy Day, this is the equivalent to us building 17 nuclear plants, right? Or the equivalent to us being able to power 13 million American homes, right? So, just to kind of keep that in the perspective of energy. And some are saying that, look, this is an appropriate, like I was saying before, this is appropriate to be doing. A lot of these CEOs, people driving forward in this AI front, they're saying that this kind of spending is appropriate. Others are saying, look, it's excessive. You're going to see bottlenecks start to pop up. I think there's for sure going to be some. You can't deny that. And then some are just saying that all this stuff that's going on, it just can't be done, right? So you get all three camps, pushing ahead, saying, hey, let's be cautious here. There's going to be bottlenecks. This is getting a little excessive. And then some saying what you guys are doing just can't be done, right? And the scale of what we're talking about. Okay. Keeping on this front, again, a little bit, but in this fiscal dominance switch to the sovereign wealth fund. Okay. And this is a kind of a tough concept. This is something I'm going to try to work on tonight. Try to get my thoughts straight on this and really try to present this well tonight, that if we're going from this old system of a financial banking system in the US, around the world, whatever, the way that we know things to be, you go to a bank, this is what you do. Instead of that, and if you're just going to go direct peer-to-peer, person to person, business to business, business to consumer, consumer to business, consumer to consumer, business to business, all these different combinations that we can get from this, if that's going to happen, then obviously things are going to have to change. And so what do we see here going on, right? Tether, $20 billion capital raise. Tether is based out of, I think it's El Salvador. El Salvador based. Again, why does that matter? Bukele, El Salvador, the Bitcoin, story that's going on down there. They're using the energy from the volcano to mine the Bitcoin. Okay. And then they've turned the economy around. They basically cleaned up the streets, cleaned up the crime. And now the Bitcoin is supposedly making El Salvador this great place to be. Okay. And so there we find Tether. Well, who has connections to Tether? Howard Lutnick. Who's essentially running Tether? Well, Cantor Fitzgerald, right? His sons are running Cantor Fitzgerald. Cantor Fitzgerald essentially is running Tether. Tether is that bridge between, right now anyway, it's the bridge between the U.S. Treasuries, okay? Because for every stable coin, you have to have for every dollar of stable coin, you have to have a dollar of U.S. Treasuries. So it's creating demand for U.S. Treasuries. So this is where it ties back to debt. And Tether is that connector right now that connects between the stable coin and the Treasury and this whole digital space that we're in. But the key is that they're raising $20 billion, okay? And there's all these things, right? They're seeking 3% stake in a private placement, right? It puts the valuation of Tether now at $500 billion, $500 billion. This is something that most of the world doesn't even know what Tether is. They've maybe heard the name, but they don't even know what it is. I'm not even sure most of us even know what it is or what it's going to do. We can assume we think we know what it's going to do, that it's going to be this bridge between that stable coin from the Clarity and the Genius Act to, and most people don't even really know what the stable coin and what the Clarity Act and Genius Act are. Okay. So again, there's a lot of things that are unknown. All this stuff's going on and people aren't really getting a vote on it. Okay. But nonetheless, they continue to plow ahead. The valuation goes to 500 billion. Okay. And it's making it one of the world's most valuable private companies. All right. And I just sent some stuff to Aaron Day this morning where we've talked about that in here where, they're opening up private equity. Okay. I'm going to try to keep this quick. So this private equity space has been this bastion for the elites for a long time, right? You need to have a certain amount of income. You need to know it actually existed. Most people don't even know that some of these funds exist. Like even if they could or wanted to invest in it, they don't even know it exists. One, you got to know that it exists. How do you know that it exists? Because you know somebody, right? You know somebody that you went to school with at Yale or Harvard or wherever. So you know people, and then these people say, "Oh yeah, you should get in this fund." And then these funds are actually connected to DC, right? They have legal firms there that basically back them, support them, bridge them through the whole political system, like Carlyle Group, okay? And like Bessemer, okay? And I want to get into that here in a second. But boy, where am I going with this? The Tether, yeah, the Tether. So many things are going through my head. I am so apologetic. I apologize so much for this. But I'm just going to leave it at that, right? Let's let that go because I don't know if I'm going to get that train of thought back. The big concern here is Tether. People don't know what it is. They don't know the name of it. They don't know the name of Clarity Act, Genius Act. They don't know what's going on here, and yet we're moving full steam ahead. And we're getting these I know what I was going to say. These private companies are getting so big, and people don't even know what they are. And they're opening up this private equity to we the people so that our 401k money can go into these private equity firms. Why are they doing that? Right? It's an exit strategy. They're moving out of that and into other things. If we're moving from this space of and I really need to come up with some graphics for this, right? This fiscal dominance to this sovereign wealth fund model, okay? And we're moving from, this banking system that we know to a banking system that may come. And we're moving from this currency that we used to know to this currency that is coming. And all this big shift is taking place, and it's all being backed by this AI revolution and all this money that's flying into this stuff. Then they're going to put us into the old stuff that used to work for them, and they're going to move into the new stuff. What's the new stuff? Tether, right? What's the new stuff? We're seeing these firms pop up in Europe now, right? Carlyle, Jeff Curry, I ran a couple clips on him a while back saying that he's seeing this massive shift take place, and it's taking place into Europe. What's it taking place into? I forget the name of this company, Alterian, I think it is. We'll cover that at some point. But it's just like Anduril, right? It's these drones, these defense contractors, right? That are a new form of war, right? It's not the old form of war that we're used to fighting. I don't think, at least not the part that matters, right? They might have a lot of boots on the ground, but I don't think that's going to be the part that matters. I think the part that's going to matter for the quote unquote, technocrats and the globalists is the drone. Right, the drone side of it, because again, they can target things very specifically. It's a calculated risk. Okay, that drone costs this much, and we can take out that asset. That asset's very valuable to us, so it's very strategic, very pinpointed, very like a scalpel. Right, they can take care of things that they want to do, and yet then they can also send a lot of boots out on the ground, right? That are going to probably get we know how wars are, right? So anyway, I'm seeing the same thing going on in Europe, right? There's a couple headlines this morning that are saying they're opening up the private equity in Europe to the public again. So it's not just in the US, this is happening in the UK. So again, they're going to give us the stuff they don't want anymore, right? Take our 401ks, put it in there, right? That's their exit strategy. And then they're moving into this whole AI front, and you can see a lot of money moving, right? $850 billion in OpenAI, $20 billion to Tether, $4 trillion moving into this AI space, and CEOs driving it, having an ad campaign to drive even more, move even faster, okay? So again, this stuff is moving. All right, now, let me see if I can connect this to Saudi Arabia, right? And then we'll go into these sovereign wealth funds. So Saudi stocks soar, okay, overnight as foreign ownership limits get lifted. All right, so we're dealing with Sharia law. We're dealing with and this is the problem with these sovereign wealth funds, right? Is that the law of the Western law doesn't always line up with Eastern law, okay? And so there's a lot of conflict that goes on with these sovereign wealth funds, and probably what's held them back to some degree, okay? Now, the Saudi market cap, okay, the Saudi stock market was up 5% or $120 billion on the news of this. Okay, so what does this mean? They're looking to remove the restrictions that allow foreign investor capital, okay, to invest in Saudi Arabia. So for the first time ever, foreign owners could actually hold a majority of ownership in Saudi-based firms, okay? So this is planned to happen by the end of this year, all right? And they're looking to, it's going to reinvigorate their stock market, okay? That's what it did overnight. Probably going to be follow through on this, okay? There's probably more to come, right? If they say this once, they're probably got other things coming that are going to back this, that are going to continue to plunge this thing forward, right? Why do the Saudis matter? Again, back to the oil, back to the ability, they have the ability to turn off the spigots on the crude oil and control, or at least hamper, Russia, okay? And their ability to earn revenues by bringing the oil prices down. They also have a massive sovereign wealth funds. We also know President Trump was in the Middle East, 3-4 months ago, with a big to-do, in Qatar, in Saudi Arabia, in the United Arab Emirates, Okay, so that's all that's going on there. Then we have, so this is a little confusing, but it's paving the way for more cross-listing and IPOs, right? Initial public offerings. Okay, so, but overall what this does is it just opens up the Saudi market to outside investors. Okay, so they're basically welcoming in investment. And I have to believe that this was at least discussed or understood or perceived when President Trump went there. Okay, these kind of moves are why Saudi Arabia was doing what they were doing, why they rolled out the red carpets for President Trump, why they're willing to cooperate. And so I'll leave that at that, right? And we're going to get into this more with the sovereign wealth funds and how this stuff comes to be. Okay. We talked about this. I wanted to, the fiscal dominance, right? I can't stress, this is a brand new concept for me in the last couple of days, as I'm starting to look at the flows of things and look at the technology movement and look at what's going on with all these different parts and pieces. And if you're going to really tear down this structure and you're going to move it into something else and what's in place to do it, the AI, okay, and all the data centers and all this other stuff, and these agentic AIs and all this other stuff that's in place, right, that changes the game, then we could be moving from this quote unquote fiscal dominance, which is a name most people don't know, but they can sort of get their head around it. The U.S. has been fiscally dominant, right? This banking, backed by war, backed by production, backed by services, backed by all these, again, the productivity of the U.S. Let's just connect that. The productivity of the U.S., quote unquote, fiscal dominance to some sort of a sovereign wealth fund where, where we're now picking up things and making them state-owned. And the question is for the benefit of whom? Okay, is it for the benefit of the people, we the people? That's what we want to know. That's what we question is somehow is this all going to be put in there and we're going to actually be the beneficiaries instead of the global elitists, okay? So again, they get to control a lot of these big assets. Is some of this stuff being pulled into the sovereign wealth fund so that we can benefit from it? Or is it not? I mean, these are the things we want to watch for. Okay, so again, Lithium Americas, let me just talk about this real quickly. Okay, so there we get Saudi stocks soar on. Okay, and then Lithium Americas, going into this potentially, at least, it's sort of a make-believe box, right? President Trump's talked about the sovereign wealth fund. Scott Bessent, our Treasury Secretary's talked about the sovereign wealth fund. Howard Lutnick's talked about the sovereign wealth fund. So we know that it's out there. I don't know if it's actually like a real thing at this point, right? But we're accumulating assets, okay, like Intel, like rare earth metals producers, like this Lithium Americas, right? All these things to put in this sovereign wealth fund or in this box that we're going to imagine is, the sovereign wealth fund holding tank, okay? How all this works out, I don't know. But because again, this space is so, yesterday I just got all this stuff thrown at me yesterday, with all these companies that I know, most of them I know, and this whole thing called AP2, which we might go into tonight during this Technocracy Roundtable too. This stuff is moving really, really fast. It's just, and it just rocks your world. You're trying to think it through and you're like, wow, what is this? And you're getting asked questions. And I'm like, I really don't know. I don't know, but I better figure it out here soon because obviously they're good questions. I better figure this stuff out. Okay. All right. So that covers that. Let's take a look at a little bit of economic data. I'm going to reset this. We'll just jump back in and let me see if I can do this with, okay, here we go. And then we'll jump through some of the economic data because there is some stuff going on that I want to show. Okay. So this is our economic week. Again, we talked about FOMC speakers, right? Last week, a lot of central bank meetings. And what do you get on the back of that? Lots of central bank speakers out of the US, out of the UK, out of Europe. Not so much Europe. The central bank meeting was the week before there. Okay. Japan, not hearing much, right? Quiet. Okay. So we had this manufacturing. We talked about that, having a focus on manufacturing this week. We'll look at that, the Tuesday replay, what happened. And then Wednesday, right, we get this couple things out of Switzerland, UBS economic expectations. We'll look at that. We get typical on Wednesday. We get crude oil inventories. That's why we do energy on Wednesdays, just to kind of set the stage for crude oil, because crude oil still is a major factor in energy around the world for probably for quite some time, even if we are moving to some other things. Okay, then we get tomorrow. We're going to get the Swiss National Bank. That's the only major central bank that's meeting this week. Want to watch this? The Swiss franc is at an interesting level. I know I've talked about that for a long time, but this energy build is one of the biggest I've ever seen. It's been going on for 6 or 7 years. Who knows when it's going to break? Are we getting closer? Is all this stuff tie into that? If the system's being rearranged, and again, if we're moving from fiscal dominance to some other structure, global structure, might be good, might be bad, might be indifferent, but the point is it's changing. Something's clearly changing here. And if that's the case, what's going to be the impact on Switzerland, right? Who's kind of sat at the center of this? How are they going to fit into this whole thing? Might be total disruption. The Swiss franc might not exist in 5 years, right? So that's why I think the Swiss franc, the potential energy build, the potential trade here could be immense. But again, nothing yet, right? It's still not in play. Okay, and then we get tomorrow, on Friday, we get the U.S. Core PCE price index. This goes back to the Federal Reserve. Jerome Powell was out speaking yesterday. But again, it gets just lost in the shuffle, right? There's so much stuff going on that it just gets lost. Now, this is a replay of yesterday's economic data. Most of this is manufacturing based, okay? Everything on here is, and you can see the expectations and then you can see the actual. Everything came in red. There was nothing good about yesterday's data. Okay, so we had the French, the German, EU, the UK, all worse than expected. And not only that, all below 50. Okay, so 50 is the dividing line on this. And we were sitting at the hinge point, right? 50.2, 50, 50.7. UK manufacturing was actually lower, 47.1. But the point is everything else tipped over below 50. So right now, all of them are actually sitting below 50. Now, we go to the US flash manufacturing PMI. We're still above 50. I kind of suspected we might see a slight green of 52.3 or 52.4. We didn't. We saw 52, slightly down. Okay, but again, above 50. So the U.S. is still stronger manufacturing-wise than most of the other major economies. Okay, and then we got this Richmond Manufacturing Index was expected at -5, came in at -17, so that was a big miss. The other one we had on here was the UK 30-year bond auction. Not good, right? Yields went higher. And the bid to cover went lower, meaning to get people to buy that debt, less people showed up to buy the debt. And to get the people that did show up to buy the debt, they had to have the yield go higher to actually be rewarded with a higher yield to actually buy that debt. That's the way I take that. Again, if we see that trend continue, then that's the right theory. If we don't, then, then it's, then again, one data point does not make a trend, but this does seem to be trending in a direction, and it's not a good direction for a lot of the world's debt markets. Okay, and then today, let's see, what do we have today? We had, UBS business expectations. It was expected at -53.8. It came in at -46.4. So again, minus, but not as negative. Okay, so again, and so what does that mean for Switzerland, right? Switzerland's central bank is sitting at 0, 0%. So it's going to be very hard. So what do we expect out of Switzerland? Not much, okay? We know that we have Schlegel there. He's the guy that's running the central bank. We know he's a young dude. We've run clips on here of him multiple times over the last, 4 to 6 months. And he's weak, I think, right? I think he comes across as very weak. And they're at 0%, right? So we're at 4.25. They're at 0. Canada's at 2.5. Switzerland's at 0. All right, so are they going to go negative? That's going to be a red flag, a big headline. No, I doubt they're going to go negative. But what we might get is rhetoric. We're going to be watching the words that come out of Switzerland tomorrow. And that's going to probably happen. I forget what time that one happens in the morning, but it'll happen early in the morning. So again, we'll have that by the time we do the show tomorrow. Okay, so that's what I'm watching there. And then we get this German IFO business climate. expected at 89.3, comes at 87.7. So the pain continues in Europe, right? The data continues to get worse. Today, we're going to get U.S. new home sales out, expected at 650,000. Right now, our housing data does not look good, right? Everything so far has been a negative read. I still can't find that existing home sales. I got to try to track that thing down. I'm sure it's out. It's just somehow it's not being pushed through. See where that's at, because if this one comes in negative, that's 4 or 5 data points for on our housing out of 10 that are negative so far. Okay, and we're about halfway through. Crude oil inventory is expected at 0.8 million barrels. That's a lot better than last time. I think it was like expected positive and it came in negative last time. And so anyway, we'll be watching that, see what happens with the crude oil inventories. Not a major impact, used to be a major impact, right? People used to watch this crude oil inventory every week like it was a huge number. Now it sort of just doesn't matter, right? But it still matters a little, so that's why we pay attention to it a little bit, but we don't get worked up over it when it moves around because it really doesn't have that much of an impact on the market. I think the 6318 has 6318 downside harmonic residual level has a lot more impact than what the crude oil inventories are doing right now. And then we get a couple more speakers out of England. We get this MPC, the Monetary Policy Committee member, Green, speaking. What are they going to say? Always have to watch these guys because it can impact markets. And you can also get a theme out of these guys sometimes, right? Sometimes it's a tipping point, right? You know, you feel a theme coming through them as well, right? And then we get one more Fed speaker today, FOMC member Daly. Again, we had Michelle Bowman and who was the other one? I'm drawing a blank. There were 2 yesterday. So we had one that's a hawk, and then one meaning that they want to raise rates, okay, because they think inflation's not in check. Then we have a dove, okay. She was out speaking. That was Michelle Bowman. She was saying we need to cut rates. And then we had Jerome Powell speaking yesterday. And again, he got lost in the shuffle. He was basically neutral. Same thing he said at the speaking when he spoke at the FOMC meeting last week, essentially saying, you know, we're watching the data. That's kind of his always get out of jail card. We're watching the data and so be it, you know, and they go from there. So he was pretty neutral. I think he's like, man, I can't wait to get out of this job. Okay. Let's talk just a little bit about the sovereign wealth fund. I want to check in here and see if there's anything going on. So again, with the stock markets, S&P is above the 65.74. The NASDAQ's above that 24,165 level. You know, for right now, they're up and they're until they come back and retest those levels. I would say the bias is still to the upside, as crazy as it is. We see all this money coming in, expected to come into this AI space. We could get a runaway freight train. Again, when we cross those harmonic levels, we should see some kind of a reaction. When we looked at the December contract, we did see a reaction. With September, not so much, right? But the December we did. And now it's above those levels. So we may have gone from, you know, in this case, I was saying, you know, we were, you know, you go from a solid to a liquid to a gas, right? And then you can even add heat to a gas and make it even more volatile, right? And that's what I think we just did is we just added heat to a gas, you know, because I think this thing was already ripping. Although we did see a lot of sideways movement, it wasn't just straight up to the full upside objective. There was a lot of chop, a lot of decision making, a lot of events that occurred in there that pushed it back down to the halfway, back up, back down, back up, back down. It wasn't a runaway freight train like gold has been or something like that. Oh, we need to look at silver and gold today. Silver actually hit that technical target that we were talking about in that 43 to 45 range. So I would expect these two to maybe take a pause here for a little while. That might fit with the cryptocurrency a little too. Let's look at those two here in a second. We'll look at those. Well, let's just look at them now. Let's just take a look at this. No reason to look at those in a second. Because I think we're through what we wanted to do. I can't believe I didn't start that other thing here. Okay, let's take a look at, let me go to the silver. Okay, so here's silver. And, this is the silver gold ratio. So this is one of the things I wanted to show because I think this is what kind of gave us that. Sometimes you're looking for that extra little thing, right, to make your decision. And this was it. And we've been talking about this gold silver ratio. All right, let me go and look at, boy, let me make sure I can find this. Okay, there we go. Good thing. All right. So again, this was our harmonic structure all the way back from, what was it? It looks like back in the end of May, all right? And so again, the pink shaded zone, right, the halfway level, and this contract's rolled multiple times, so you can see these leftover yellow circles. It did matter on the prior contracts, not so much here. But anyway, nonetheless, this thing's still, even though we've rolled the contracts, this thing worked just quite nicely, right? Got to the halfway, gap through, went up here to the full upside objective right there, retested the full upside objective, and then it gapped through the full upside objective, came back down, retested it. Little bit testy right in here, the fact that it broke down below. And the white dash line was our target, right? 37.93. Okay, we talked about that for a long time. And through here especially, right? It was like, it looked like it was going to get that 37.93. It went up, couldn't quite get there, went sideways. Again, this wasn't on this contract, so maybe it's a little murky, but it couldn't get there, right? Couldn't get to 37.93, but it looked like it was going to get there. Went sideways, had the momentum, had all the things it needed, got the 37.93, got through. We said if it holds above 37.93, our life is easy, okay? Sit back and hold this thing for what, right? Again, this is like the same thing we're talking about with the levels in the S&P, right? So if we look at this S&P real quickly, it's the same kind of a thing, right? The 65.74, all right, is the same kind of a thing, right? We got through it, okay? And this thing should go to white now too. So a white dashed line, okay? So again, we get up to it and then we get through it, okay? And now our life is, I guess, easy. The nice thing with silver is you don't think about like all the things going on. It's just silver, right? It's either, if you drop it on your foot, it hurts. If you put it somewhere and it shines, it looks pretty, and you know that maybe someday you could use it for something, right? But you don't think of all these other things like AI and, it has industrial needs and precious metal needs and things like that, but it's a lot more simple to deal with, right? There's not all these other things that go with it. With stocks, it's a whole different ballgame, right? You got tech stocks, these stocks, those stocks, all these different things that you're trying to, break it apart and break it into these different sectors. The key though is the S&P got above, right? And now I guess, quote unquote, our life is easy as long as it stays above the 65.74, the white dash line, the trend is up. And that's what I'm trying to say is the trend is up on this thing until proven otherwise. Okay, I wanted to see I kept saying, I want to see what it does when it gets there. We got to see it. Doesn't mean I have to like it. I don't really like what I'm seeing, but it is what it is, And so, you can call it being wrong. You can call it, we can call it a million different things. I just call it, look, it's above 65.74. And if I'm going to fight it, I need to be very careful, right? I want to be very careful fighting this thing, especially when I hear $4 trillion of additional investment coming in its AI space. We could see the biggest bubble this world's ever seen when this thing is done, or we could see the greatest productivity gains this world's ever seen when it's quote unquote done, when we get through this. I don't know what it's going to lead to. All I know is that's a lot of money coming in, and all that money coming in has driven the stock market higher. So this thing could continue and it could just go crazy, right? So again, 65.74 is that level on the stocks, right? Now let's go back and look at this on the silver because I want to show something. So again, this 37.93 was the full upside objective on the harmonic structure. It was great. Not only did it get there, but then it held pretty much, other than this spot right here, it held as support, but it came back up and retested and held here. So it gave you chances, right? That if you got out at 37.93, you could find ways to get back in without losing too much, right? Without missing much of the trade. But at least you could take a break, step away, think about it, watch what it does, and then come back in. That's what I do a lot, right? It's like it gets to objective, I get out, take a break, think about it, reassess. And if I like it, still to the upside, watch what happens afterward, see what happens when it gets there. And then you can get back in, okay? And that's what we saw. And during this process, you can see a couple things going. You can see a nice energy build happen here with decent momentum. So you got to believe right in here that the trend's going to continue to the upside, okay? The momentum is strong. No matter what momentum measure you're using, the momentum is going to be strong, and you get an energy build. So the odds are high that it's going to resolve on the upside. All right, now let's go and look at this silver gold ratio. Hopefully I didn't lose that. Here it is. Okay. So how did we know? How we didn't know, but how did we have a better idea that this thing was going to work out? And silver would perform better than gold, right? If they were both going to go up, this is why we would like silver over gold, because this thing had gotten so stretched. This is the gold to silver ratio, all right? And it got really stretched back in here, but then it almost got up there, and then it got there, right? But the key is it got to 100 to 1, right, recently, right? That last circle was at 100, over 100 to 1. So 100 ounces of silver to buy an ounce of gold. Okay, and you can see this is a monthly chart that goes all the way back on the left-hand side where that data starts. That's 1975 or 70, mid-1970s. And then you see we get up into this where this purple zone's at. That's from the 1990s all the way until present. Okay. And so I haven't even brought in this other stuff down in here. I've just left this out of the equation. I'm just saying, like, even at high elevated levels, right, there's a good chance that the silver gold ratio gold silver ratio will come in a little bit. So this is how you can say, okay, if I like the metals, maybe I don't do gold, maybe I do silver, right? And it gives you, and it's also protective. It's protected because the ratios at extremes. It's also protected because silver, if we're not going to blow up, right, economically, and we're going to go into, again, silver is going to be needed for a lot of different things, right? So again, it's an industrial metal, even though it has a precious metal component to it. And if we're going to go into a place where we need this stuff for, lots of different things, right? I mean, silver goes in a lot of things, a lot of circuit boards, a lot of, it goes everywhere, right? There's so many places for silver. So the key is there were a couple protective things here with silver, one, the ratio was stretched. Two, that we were above the harmonic structure. We had the harmonic structure up to 3793. And then when we got above it, we could feel comfortable that we had a line in the sand to measure the risk against. And then we had the technical level, which I think I have on here. I can show you. So this is a technical level, right? This yellow line back to this prior high, right around in here, okay, at 44, what are we looking at? If I wanted to be exact, I'd say $44. But I think we threw a range on it, 43 to 45. And the high yesterday was, 44.30. So again, we hit the level. So what are the odds of this thing now going sideways for a little while? It's decent. There's a decent chance that this thing will get up here, hesitate for a while. Could it blow straight up to the $50 an ounce? It could. It could just, but you can see this thing starting to get non-linear, right? It's starting to go, exponential or, non-linear. Let's just leave it at that, right? It's starting to accelerate on the upside. At some point, these things run out of juice. Something happens, like we saw in copper, right? Copper was doing the same thing. Let's just take a lesson learned here with copper, right? Everybody was talking about, let me just get rid of this, so you can't see it, but maybe I can't do it. Anyway, we were at the upper end of this trend channel, okay, where that green box is at, and we're saying, look, this copper is getting pretty stretched. Can it go higher? Sure, but you can see it's starting to get nonlinear, right? It's starting to really reach for stuff, okay? It's above, it's on all-time highs, and it's at the upper end of this trend channel. It seems to have worked quite a bit. And then what do you get? In 1 minute, 2 minutes, this thing trades straight down from, 58, 55 down to, 44. So it loses a huge amount of value in 1 minute. And again, it's all based on, again, back to the sovereign wealth fund concept, right? Trying to get copper, okay? Open up these copper mines in Arizona, get access to copper. Again, rare earth metals, rare earth minerals, critical minerals, rare earth magnets, right? All these different things that the U.S. doesn't have because we gave it away to China that China has. And so that's really back to this battle between the U.S. and China, right? The U.S. has chips, right, and access to the AI chips, and China has the rare earth metals, rare earth magnets, critical minerals, okay? And so does Russia. The problem is they don't have the ability to refine it as far as we know. China does, right? So we're sort of at a stalemate on these two things, and this is the battle that's going on, And so anyway, that's that. I don't want to go too deep into that because I think we've covered that stuff. But but there's that, and then so that's the silver. I think we've got that thing. Back to this. I think we covered that. Let's take a quick look at Bitcoin and see what is going on there. We kind of laid that out yesterday. Potential, head and shoulders here. I'm just not getting good data on this. What are we at? 113. So basically sitting right around 113,000 per Bitcoin. And the question is, again, you can look at that chart. It looks like you're like, what is that? But yesterday we kind of went through this and we followed this yellow, this series of yellow circles through here and, kind of coming back down a head and shoulders pattern, forming a shoulder over in this area. Okay. And then potentially, and then coming back in and testing the moving average again, right? These fanned out purple lines that I have in there. And what would that mean? It would start to press on the neckline of a head and shoulders pattern. Again, these are what these guys are looking at. It's not, we'll do our own analysis on it. But for right now, that lays the big picture. Bitcoin could be topping out. We see some of these altcoins also starting to come under some pressure. So there's some confirmation there. You can watch Bitcoin, Ethereum, some of the big ones, Monero's another good one. There's a handful of them that are worth watching. And then the Zano too, right? We'll talk about that. Aaron, that's one of his favorites, Zano, because it's a really good privacy coin. And that's something we need to get into too with privacy, right? Getting some things off the grid, right, for a privacy standpoint that you can still use day to day. That's the beauty of some of this technology is you can get things, some of these, you can go to a privacy coin and you can actually transact. And it's not like gold. If you buy gold, right, it's hard to transact in gold unless you buy gold backs, right? They actually make these thin little slivers of gold that, have a value to them. And, it changes day to day because obviously the price of gold changes. So, you got to monitor that. But the nice thing with, these, some of these privacy coins is it gives you privacy, right? But you can also transact in them. And if you have like a utility behind them, like something of value, like if Zano has a backbone that you can actually build, a parallel economy on to some extent and tokenize different things and put those tokens on that platform, and you can actually make functional products on there, then now this thing has a use case too. So not only is it, can it have a price appreciation, not only does it potentially give you privacy, not only can you transact in it with privacy, but it also might have a really good use case where you can say, oh, there's lots of products coming onto the Zano platform. So again, a lot of these things are somewhat high risk, but also potentially high reward. But sometimes they're really not even that high of risk. Well, there's always risk, right? There's always risk in this stuff. But those are the kind of things we want to get into. And so I'm just going to spare us on this sovereign wealth fund thing today. We might come back and do this again tomorrow. But I'll just go through this quickly. Let me just go through the headlines. There's so much more to go on underneath this. But again, sovereign wealth fund is a state-owned investment fund or an entity that manages national savings for investment purposes. Okay. The first one was in 1953, the Kuwait Investment Authority, okay? And it was essentially established, right? And it was still part of the British Protectorate, okay? So it kind of had a British connection there, all right? And then we get this other fund, right? The Kiribati Revenue Equalization Reserve Fund, right? A lesser-known sovereign wealth fund established 3 years later in 1956, okay? It represented one of the earliest examples of a non-oil-based sovereign wealth fund. So the Kuwaiti one was all oil-based, kind of like we talked about, right? Try to smooth out those cycles, take in revenues when times are good, and then try to invest it someplace else. I'm not sure that that's how these things were operating back then because this was the 1950s. I'm not sure that that's how things have changed a lot since the 1950s in terms of speculation and things like that, right? The U.S. was just still kind of getting its footing, right, as the world leader at that point in the 1950s, right? And again, baby boom, right? That whole era, right? The U.S. was a bunch of green shoots, right? It was like springtime in the U.S., lots of people felt confident, right? A lot of household formation, a lot of, babies being born, right? That's confidence. And just probably a different moral fabric. I mean, I didn't live then, so I don't know, but from what I perceive, it was a slightly different moral fabric than what we're in right now. Maybe more than slight. Okay. But then you go into the 1950s to 1980s, right? This Cold War era. Okay. The sovereign wealth funds were rare, right? But most countries held reserves in central banks. Okay. Again, the central bank thing was building steam, right? 1913, 1930s. Our central bank was really making big changes from that when it was early formed until the 1930s. It made some changes going into and coming out of the Great Depression and the wars and so forth. Then we get into the 1990s, 2000s, right? We get the oil boom. We come off of the gold standard in the 1970s. We go on to the petrodollar standard. Okay, so now all of a sudden these sovereign wealth funds start making sense, right? Especially as we go into Iraq 1, Iraq 2, we go into these wars, even potentially even the Vietnam War, right? We go into these wars and now all of a sudden crude oil is starting to move around. So these guys are starting to say, wait a minute, we need to kind of prepare for the bad times and the good times. And there's more stuff going on than that, right? It's not just all above board. There's a lot of below board stuff going on. But then you get this oil boom and this globalization, okay, that takes place. You get Norway, you get Russia, Saudi Arabia, the United Arab Emirates, right? They're all expanding these sovereign wealth funds to manage the windfall profits, right? When they have these windfall profits. Then you get the Norway government pension fund, that really kicks in the 1990s. That's now the biggest one in the world. I think it's at 1.4 trillion or something like that. It's the biggest. In China Investment Corporation in 2007. I think it's the second biggest in the world now, very big. But again, the goal there is, again, not oil, but to diversify China's vast exchange reserves, right? Away from a low yield U.S. asset. So again, different purpose, but same concept, okay, for the sovereign wealth fund for China. So again, we want to go through the formation of why they form these sovereign wealth funds. Are we forming one now with these different assets we're talking about, right? This, this lithium, Lithium Americas, right, that we just picked up, and Intel and these other things. Again, this formation of this sovereign wealth fund box, okay? And that's what we're going to cover tonight, right? And then we get into this modern era where, again, this thing took a shift over the last 10 years. It really got an ESG focus. It got tied in with the World Economic Forum. All these sovereign wealth fund managers were going to the World Economic Forum. How much of this stuff was nefarious? It was going on with all this money that had been accumulated, right? I mean, people have a hard time when money gets accumulated in a spot. It's something nefarious. Something bad doesn't happen, right? It's that greed factor. So again, a lot of things probably corrupt in these sovereign wealth funds as well. Okay, but here's where we stand with the key statistics on these sovereign wealth funds, right? Is that Norway's it's at 1.5 trillion, right? China's at 1.3 trillion. Abu Dhabi Investment Authorities at 950 billion, and the Kuwait Investment Authorities at 800 billion. Okay, and so essentially, just concluding on this is that the sovereign wealth funds have evolved from obscure government savings vehicles into powerful global investors with significant influence on markets. Okay, and so they're in various industries and they have various international relationships, and the growth of these things will likely shape investment trends and, and sustainability efforts, right? And even geopolitical dynamics in the decades ahead. And that's where we're at right now. Are we forming a sovereign wealth fund that's going to be impactful around the world? And if it is, in what ways? All right. So again, that gives you a little bit of a setup for tonight with the sovereign wealth fund thing. And somehow we're going to blend robotics in there. I'm not quite sure how we're going to blend those two. I'm going to focus mostly on the sovereign wealth funds and probably take a back seat on the robotics side of this stuff, unless I have a point or two to make. But anyway, hopefully, again, I'm sorry the show was, a lot of stuff going on, and certain things I don't get started, and I apologize. But nonetheless, I think we covered what we wanted to. No clips. I'm trying to stay away from clips for a little while just because some things are broken. I got to fix. It's a whole other story. Every time I think, okay, then something else breaks, and I'm like, yeah, I can't deal with that right now. So no clips, but I kind of like no clips because I know it's a lot of me, right? And in charts, and we'll try to bridge that so it's just not a lot. It's not like too much of me. I mean, I know it's an hour and 20 minutes of me. That's a lot. But the point is, we'll try to smooth the show out and make it a little better. Anyway, the point is, it was a mess today, and I apologize on some things, but hopefully, again, still good content. Good. It sets it up for tonight with the Sovereign Wealth Fund and this Technocracy Roundtable. So with that, thanks for joining us on Energy Wednesday, and have a blessed day. And hopefully we'll see you guys tonight. And if you can, spread it around, right? I think this is going to be a great topic. I think there would be some good stuff that comes out of this. Thanks, everyone. We'll see you.